Hello everyone, I'm Jamie Holmes. It's been an extraordinary week in the currency markets. On Wednesday, Japan sold its own currency and bought U.S. dollars to weaken the yen and prop up its export-led economy. It was the first time since 2004 that Japan directly intervened in the currency markets, and it was a move that Weiss Research currency specialist Bryan Rich predicted. We recorded the episode that you're about to watch before Japan's intervention and the yen's subsequent devaluation, so you may notice some minor discrepancies. However, we re-recorded the Picks and Pans segment to give you new ideas for capitalizing on the recent actions in the currency markets. And now, enjoy this week's episode of Money and Markets. Currencies are the lifeblood of all the world's economies, and governments face a constant struggle to keep them at a healthy level. If they're too low, consumers have less buying power. If they're too high, the country's exporters are at a competitive disadvantage. Central banks around the world are struggling to maintain this balance, and in many places, it isn't working. This week on Money and Markets, we'll examine why Japan and Switzerland are finding themselves on the wrong side of the currency trade and what they can do about it. Then, Rudy looks at Latin American countries that could be facing similar problems. Plus, Sean Broderick and Bryan Rich discuss the relationship between currencies and commodities. And we compile the picks and pans of all of our editors for the best ideas on how you can take advantage of the trends playing out in the currency markets. All that and a final comment from Mike Larson coming up right now.
From our studios in Jupiter, Florida, Weiss Money Network presents Money and Markets. And now, Jamie Holmes.
Hello, everyone. When most people think about the currency markets, it's usually in terms of relative value. For example, is the dollar rising or falling against the euro, and how's that going to affect my European vacation? But the truth is, currencies are vitally important to a country's economic health. Joining us on set to explain why is Bryan Rich, a currency specialist at Weiss Research and the editor of the World Currency Alert. Hello, Bryan.
Hey, Jamie.
Bryan, why are currencies so important, not just for consumers and businesses, but for economies as well?
Right. Well, several reasons. International trade would be one. A weak currency would enable you to export more, which sort of stimulate exports, which may stimulate some manufacturing production within your country, which may stimulate employment, ultimately a driver of economic growth. On the other hand, a strong currency would stimulate imports, which potentially could enhance the standard of living. And then there's the investment perspective of it. A weak currency has a tendency to attract foreign capital into foreign direct investment into your economy. A strong currency could give consumers in a country an opportunity to go out, and investors in an opportunity to go out and seek higher returns in the global markets.
The Japanese yen, the Swiss franc, they have been rallying recently. Why is that so significant and potentially dangerous, really, to those economies?
Right. So these two economies, these two countries, are dealing with currencies that are too strong. In the case of Switzerland and Japan, on a purchasing price parity basis, the currencies there are overvalued by roughly 30% relative to the dollar. For Switzerland, the problem there is its value relative to its European trading partners. They do about 60% of their trade in Europe, and over the past 3 years, the currency there has strengthened about 40% against the pound, and the Swiss franc strengthened about 25% against the euro. So certainly a drag on their ability to export to the European partners.
Okay, Bryan, what can a country like Japan do to compete more effectively against, say, China, for instance, which has done such an outstanding job of manipulating its own economy?
They've certainly done an outstanding job. I don't know if it's good for the global economy. In fact, it's terrible for the global economy. But I don't think there's a lot Japan can do with China on their own, but I think certainly the unfair advantage gained by China relative to its Asian trading competitors will invoke a response at some point, and certainly with the rest of its major global trading partners as well, the U.S. Specifically. Ultimately, I think the response to China will be trade tariffs to sort of neutralize that impact of the way they're manipulating their currency. But for dealing with Japan's the yen problem, a strong currency, I think what we're going to see is the Bank of Japan be forced to step in and intervene in the market to weaken its currency, to sort of free up the noose around the exporters' necks that they're being really burdened by a very strong yen and their ability to export to the rest of the world.
Okay, same question, or line of question, I guess, for Switzerland. They have been forced basically to buy euros.
Right, with the problems that the euro, the monetary union, and the euro currency has had and for much of 2010, the Swiss franc has taken a real brunt of the punishment there by strengthening, by accepting all of the capital flows from Europe and the UK as they're looking for safety, as the euro was declining and the pound was declining for much of the year. The Swiss National Bank stepped in for much of the year as well and tried to stop the pace of the appreciation of the Swiss franc by selling Swiss francs and buying euros in the market. Ultimately, they've backed off, recognizing that they're not going to be able to stop the decline in the euro. But I think what we're going to see here is a next leg of the European crisis, and that's going to, again, continue to strengthen the Swiss franc, but I think ultimately they'll get some reprieve by weakening against the dollar, which I think will do better as the world's safe haven currency.
All right, Bryan Rich, always a pleasure, sir.
Great, thank you.
Okay, Brian's going to be back a little later in the show to discuss gold's appeal as a hard currency. First, though, let's turn our attention to some other countries that have similar problems as Japan and Switzerland. Of course, we're talking rising currencies and more expensive exports. Rudy Martin is here, is the editor of the Latin Stock Investing newsletter. Hello, Rudy.
Hello, how are you?
Rudy, I want you to tell us a little bit about what the Latin American countries are going through right now in terms of their particular currencies.
Well, it's not just the developed countries that have a problem with currency rates. Obviously, if Japan has a lower yen, they'll sell more cars. For the Latin American countries that provide the steel and the copper that go into the cars, the lower their currencies, the more materials they'll be able to do in export to them. And so the problem here really comes down to what resources each country has in terms of reserves and interest rates and economic policy that they can use to offset the rise in the currency.
Okay, speaking of resources, let's talk about Chile, the world's biggest copper producer. And as you well know, copper prices, they've gone up recently along with Chile's currency. Now, what is that country doing to combat that problem?
Right. You know, it's really not that much of a problem for Chile. Yes, copper's gone up 16% in the last 3 months, and the current Chilean peso relative to the dollar has gone up about 10%. But unlike Japan, which is a disinflationary economy, in the case of Chile, they're just recovering from the world global recession. They're just recovering from an earthquake, and they've got an $8 billion government stimulus package that's going through right now and helping them post stronger numbers. As a matter of fact, Chile, along with Peru and Argentina, will be the leaders in growth next year in Latin America, and you know, that's really an encouraging sign. So expect their currencies to go up.
Okay, let's head to Brazil, the world's largest sugar exporter. What is its currency strategy going to be going forward here?
The Brazilian situation is a tough one. You've got sugar that's gone up 50% in the last 3 months. You've got coffee that's gone up 40%. These are big exports of Brazil, and yet the currency in Brazil has only gone up 10%. Unlike some of the other smaller countries, Brazil has a lot of foreign currency reserves. Brazil has more foreign currency reserves, as a matter of fact, than the Swiss, the Germans, and obviously more than the U.S. So they'll be able to take some measures to be able to offset the rise in that. But ultimately, any reserve-based strategy will fail because the strength of the demand is really what ultimately will drive the Brazilian real up also.
One Latin American country that's been through a massive currency devaluation recently, of course, is Argentina. Now, how has that country recovered? And its experience, how has that been instructive for other Latin American economies?
Well, personally, I think the Argentine currency, like the others, will appreciate. But what's different there is that they don't have interest rate policies they can use. They don't have reserves they can use. But what they have is soybeans. Argentina is the largest exporter of soybeans in the world, followed by Brazil as the second. And obviously the largest client for soybeans is China. So the trade with China and the exchange rate that they use is an important factor. What the Argentines have been using, since they don't have money, is taxing the exports to China to try to offset the differential in interest rates and in exchange rates. Ultimately, that strategy too is failing, and what's happening is that Argentine peso will also increase.
Rudy Martin, thank you, sir. We're going to be talking a lot more about the relationship of currencies and commodities a little bit later in the show with Bryan Rich and Sean Broderick. Coming up next, though, our Picks and Pans segment focuses on how to take advantage of the moves in the currency markets using stocks and exchange-traded funds. As always, You can ask questions of any of our guests or send us a comment or suggestion for a topic that you'd like us to cover here at Weiss Money Network at weissinc.com. Now, we may not be able to respond to all your emails or address them on air, but we are keeping them all on hand for future episodes, and we appreciate all of your feedback. Money and Markets will be right back.